For most of you, your major problem is where you're actually going to enter in the market. So for instance, you saw the market going up. So market makes power move, retrace, power move, retrace, power move. And now you want to enter in the trend. You want to join the trend. So what do? You wait for the market to come to a support zone and you enter the trend. But when you enter the moment you enter the trend, the market reverses, boom, and then you get stopped out. Others to what happened to them is that, let's say the market is making power move, so power move, retrace, power move, retrace, power move. You want to enter. The moment they enter the market takes them out and continue to the original direction. Yes, these are major problems most of you guys face. Some other guys, the problem they will face is that they see the market going up, so up move, retrace, up move, retrace. Now they want to enter on the next retracement. But because they entered wrongly, before they are going to enter wrongly, what happened is that they entered here. And now the market came back all the way. Now take them out and reverse, and then they would have gotten a winning trade. But because they entered wrongly, their stop loss has to be very far. Because of that, their take profit target must also be very far, and the market could not get there. Assuming they had waited a while for the market to trade back to a very good point, and they entered there, this trade would have been a winning trade. But because they couldn't wait, they got a losing trade. If this is your problem, it's because you have issues with three things. One, you are impatient. That's one. You are impatient. Two, you don't know how to do multi-time frame analysis. You don't know how to do multi-time frame analysis. And the third reason why you are facing this problem is because you lack the skill to set proper stop loss, proper entry target, and proper stop loss. So that's your problem. That's your major problem. So let's move on. Let me take you through details so that you'll be able to ground the concept, okay? And when you enter, you're going to enter correctly. And when you are buying or you're selling, you're going to buy and sell successfully. So let's move on. So the first problem, entering on a retracement. Entering on a retracement. How are you going to enter on a retracement? When you see the market makes power move like this in the market, you can see that at this part of the chart, the market is trending beautifully. Where are you actually going to enter? Where are you supposed to enter? Yes, who can tell me? At this point, now the market has already played, so you can tell where the retracement went to, right? But assuming the market has not played, where are you going to enter? So most people, the major problem is on the retracement. Market makes power move, retrace, power move, retrace, and power move. Now on the retracement, they don't know exactly where to enter. They don't know exactly where to enter on the chart. So instead of them to wait for the market to come back to a very important level like Fibonacci level or trend line or moving average, then what they do is that they rush and then they take the trade here, as I've already explained. They rush and take the trade here. If you rush and take a trade anywhere here, do you know the consequences? One, because you are impatient, you enter the trade here. It's going to also result in a very poor stop loss, which means that your stop loss is also going to be very tight. You're going to set your stop loss here because you entered here. You set your stop loss here, and the market come back, take your stop loss, and move to your original direction where you are predicting the market. And then you say, oh, market manipulation, and so on. But the problem is that you yourself, you have issue with setting your stop loss or entering. Your entry is wrong. If your entry is wrong, then your stop loss is also going to be wrong. Because if your entry is very bad, because you're impatient, you entered wrongly, then your stop loss cannot be here or here because you have entered all the way here. How can you set your stop loss here? You can't do that because of that. After you entered wrongly, most people what they do is that they now set their stop loss. So they enter here, they set their stop loss somewhere there, and then meanwhile, that is the zone for the support zone. That's the zone for the market to retrace up to. So because they're impatient, markets come back, take them out immediately and reverse to their position. So you can see that impatience can result in what? Poor stop loss. Just because you entered wrongly, you entered at the wrong place, it results in poor stop loss because in this scenario, you can see that assuming you entered at a very good position, let's say that you entered here. Let's say you are supposed to wait for the market to come here and you entered. Then why should be your stop loss? Your stop loss will be at a very good place, right? A place like this. And market will be hard to get your stop loss. But because you entered poorly at first, instead of you to wait, you entered here. So your stop loss is where? The stop loss will be somewhere here. Market will come, take you out, and reverse to the original position. And then you get a losing trade. So this is a major problem most of you guys face because you entered wrongly, and because you entered wrongly, your stop loss is also going to be very poor. But what's the best way to set a stop loss? Most people ask, so what's the best way to set a stop loss? When you're setting a stop loss, your stop loss must be at least to be able to contain 3 candlesticks. At least 3 candlesticks must be able to accommodate your stop loss. So that's something that you enter the market here, you wait for market to retreat and enter the market here. At least your stop loss should be at a place where you're going to get at least 3 candlestick pullback. In case the market pull back 3 times with 3 candlesticks, it's not going to lock you out. So for instance, first candle, second candle, third candle. If your stop loss cannot contain 3 candlestick pullback, then your stop loss is very poor. Most of you guys watch YouTube here and you think of sniper entries. You are searching for sniper entries. Because of that, what most of you guys do is that when you enter in the market, you put your stop loss very tight, at a very tighter place. Because of that, when market comes, it takes you out. It takes you out and reverts to the original position because your stop loss is very tight. It takes you out and reverts to the original position. So you begin to complain, why do my stop loss always get hit? Why is it that my stop loss always gets hit? It's all because of what? You are searching for tighter stop loss, which is wrong. We don't do that, okay? Don't do that. For financial traders, we don't do that. Make sure that the stop loss you are setting at least can contain at least 3 candlesticks, 3 candlestick pullbacks. So let's say on this chart, the market is trending beautifully, right? You know that the market is trending beautifully and you want to enter on this chart. Where are you supposed to put your stop loss? Let's say your entry is here. Let's say you saw a pattern here, so your entry is here. At least the stop loss should be able to contain 3 candlestick pullback. I think the market reverse 1, 2, 3. The stop loss should be able to contain 3 candlesticks. So you have to put your stop loss rather here. Have you seen? Put your stop loss there, and then you take profit is what? 1:2 risk reward, which means take profit 1:2 and out of the market. Very simple. But don't search for sniper entries. Sniper entries will result in a very losing trade. Because let me explain something to you here. In trading, we know that definitely losses are inevitable. You're definitely going to have some losses, right? Because of that, let's assume that you are just an average trader. You just began trading, and you're going to get at least 50 of them to be wins, 50 of them to be losses. Just a scenario. So 50 wins, 50 losses. So 50 wins and 50 losses, right? So both of them, 50 wins and 50 losses. Now, because of your simple mistakes, this is what's going to happen. If you make a simple mistake and you enter wrongly, instead of you to enter at a good place, you decide to rather enter here. You entered here, and then the market came back. Take your stop loss here, take your stop loss and reverse to your original direction, which means it is a winning trade. But you have given some of the winning trade to the losing side. Do you understand? You're giving some of the winning trade to the losing side. Though the losses are definitely going to lose, but your winning side is giving some of them to the losing side. For the rest of you guys, the problem you also face is multi-time frame analysis. You don't know how to trade multi-time frame. So because of that, when you enter a trade, then you get a losing trade. Let me explain to you. Assuming that you are a day trader, if you're a day trader, you trade on H4, right? H4 is your parent time frame. You analyze the market from H4, and then you enter your trades on H1. So H1, you trade on H1 and M15. So M15 will be your trade where you take your trade. So you take your trade either on H1 or on M15. Now, if you want to buy or sell anything in the market, make sure that the higher time frame is in line with each of these guys. The higher time frame must be in line with either the H1 or the M15. Because if you trade the market with unaligned time frames, you're going to have a lot of losing trade. Let me explain to you. Let's say that the H4 is on a downtrend. So downtrend, power move, retrace, power move, and retrace. Everything shows that the H4 is clearly on a downtrend. Now, you want to enter a market, you want to buy or you want to sell. Now you're in a downtrend, you want to sell. Now you go to the H1, you will also realize that the market is also trending downwards on the H1. So power move, retrace, and power move. So H1 too is on a downtrend. But on the M15, when you open the M15 chart, you notice the M15 was rather on an uptrend. And you buy. You wait for the market to retrace back here and you buy. And the moment you buy, the market moves as it's going and then boom. Now you get a losing trade. What is the problem here? Who can tell me what's the problem here? The problem here is that this uptrend on the M15 is not any uptrend, but it is just a retracement on the H4. Can you see? This retracement on the H4 can be a very huge uptrend on the M15. So you might think the M15 is on an uptrend. Meanwhile, it is just a retracement on the H4. So you enter, you wait for the market to pull back, you enter and boom, you think the market is going up, boom, and then you get a losing trade because you didn't realize that it was just a retracement on the H4. So what do you have to do? make sure that before you enter anything on M15 or H1, make sure they are all in line with the higher time frame. So let's say that you want to enter anything on the M15. So realize that the M15 is on an uptrend, H4 on a downtrend, H1 on a downtrend, but M15 is on an uptrend. You have to wait, be patient and wait for M15 to also reverse the trend in line with the original time frame alignment. So H4, H1, M15 all should be going down. Now you look for a good pullback and then you sell. You take your profit to 1 to 2 and you're out of the market. Very simple. You see? Very, very simple. But if you don't do this, you're going to have a lot of losing trade because you think that the M15 is on an uptrend. Meanwhile, it is just a pullback on the H4. Do you understand? Just a pullback on the H4 because the original trend on the H4 is a downtrend. The original trend on the H1 is a downtrend. But why should you go and trade an uptrend on the M15? So this is also one of the major problems you guys face every day. So one, because you don't have knowledge with retracement. Two, you have no knowledge with what? Multi-time frame analysis. You cannot analyze the market on a multi-time frame level. So because of that, you think a pullback is an uptrend and you enter and you get a losing trade. So now the question is, how do you solve this issue? How do you solve this basic issue? One, entering on a wrong retracement, and two, not having knowledge in multi-time frame analysis. And you know that each of these ones have their consequences, right? If you enter on a wrong retracement, which means your entry and your stop loss will be wrong. If your stop loss is wrong, the market can take you out and continue to your original direction. If your stop loss is still correct, market can still take you out and they have a losing trade because you did not analyze the market on multi-time frame levels. So how do you solve the issue? The first one you have to tackle is the retracement level. How far is the market going to retrace? That's why you have to insert moving averages or you will draw your trend line. So every time, draw a trend line. How do you know that the market is ready to trend? So you have to draw a trend line. You're looking for 3 power moves. Okay, the Z pattern, as I always say, Z pattern. So power move, that's the first one. We have to retrace and you have another power move. The moment you have these 3 things formed on your chart, and you notice that the high is taken, the high of the first one is taken. The market has taken out the high. So we are waiting for the market to retrace back to any important zone. We don't know how far the market is going to retrace. So we wait for the market to retrace back to any important zone, like moving average, Fibonacci level, or trend lines. So we have to wait and wait for a confirmation pattern next. So let's say that the market is retreating. We don't know how far the market will retreat. So what do? You draw your trend lines across. So you draw trend lines across. You don't see here. Assuming the market has not played, you don't see this side, okay? So you don't see this side. You just see the Z pattern. So you see first touch. You see second touch. Can you see? First touch, second touch. So what do? You draw a trend line across to touch both of them. And then we wait for the market to come back to touch the trend line again. If the market does not touch the trend line, don't take any trade. Or you insert moving averages, or the best tool to use is Fibonacci tool, where you draw a Fibonacci tool from A to B to C. I have a video on Fibonacci, so if you don't know how to use Fibonacci, just go to the video description. Just go to my channel, okay, go to my page and you can find a video about Fibonacci. But here, I'm just using to explain to you how you can use it to trade retracements. So since we can't tell how far the market is going to retrace or the market is going to pull back, that's when you use a Fibonacci tool. So you draw a Fibonacci tool on the chart from a point A to a point B. And as you can see, here's a point A and here's a point B. And you drag it back, you extend it. Now, you wait for the market to retrace to any of the points, either the market retracing to the 50% retracement level or the 60%. And as you can see here, the market retrace to the 50% retracement level. It doesn't matter the time frame you're trading. Right now, the time frame I'm making the analysis on is M1. Can you see this M1? Which means that no matter the time frame you're trading, Fibonacci levels work. Support and resistance work. Trend lines work. I'm using the 1 minute time frame because I realized that of late I've been a little busy. Since then, I've been trying to trade my strategies on M1. As you can see, I've been posting some 1 minute videos here, 1 minute live trading. Also, I noticed that I've been trading my strategies on H1 and M15, and because of that, it's very difficult to do some of the live trading videos. Okay, I want to do live stream for you guys to see how I actually enter the trade. Because of that, I decided to start trading the same strategies on the M1 time frame. So here is the M1 time frame, and Fibonacci levels work on any time frame at all, either M1, M5, M15, H1, H4 daily. Fibonacci levels work on any time frame. So here I'm using the M1 time frame to analyze the market right now. Here, okay, M1 time frame to analyze the market right now. So you draw a Fibonacci level, you extend it, and then you wait for market to touch the 60 level or the 50 level, and then when you find a confirmation pattern, now you enter the market there. and successfully you place your buy order. Let me clean this now. We are done with the Fibonacci. So you place your buy order here, your buy order. Have you seen? You place your buy order there. Let me clean this one too. You place a buy order here. After the pattern, your stop loss behind the pattern at least should be able to contain 3 candles, right? It will contain at least 3 candles. Stop loss behind the pattern, and your take profit target is what? 1/2. Take profit 1/2 and out of the market. So which means that if you are risking 100, you should be making what? You should be making 200. Okay, you should make it $200 if you are risking 100. If you are risking $200, you should be making $400 in return. Stop loss always 1/2 risk reward. Okay, don't be searching for sniper entry, and don't be searching for entries for 1/6. Don't be doing that. At least 1/2, you're out of the market. Very simple. So you enter here, and then you're out of the market. Your stop loss. If your stop loss get hit, get out of the market. Don't be pulling your stop loss. Most people, your problem is that you keep pulling your stop loss, pulling it, hoping that the market is going to reverse your position. Guys, don't do that. Stop loss 1/2, and you're out of the market successfully. So you can see the market pull back to the 50% Fibonacci level, and then we took our trade successfully. When market also decided to make another power move to the upside, now since the market is making power move to the outside and taking out the high, what you have to do is that you have to also wait for the market to retrace again. Very important zone. And where is the important zone? The same Fibonacci level or trend line zone or moving average. So here we're going to Fibonacci as the first one with Fibonacci. So you take your Fibonacci tool, you draw from a point A to a point B, and you see where it retraces. As you can see here, it retraces to the 61.8 level. Let me clean the Fibonacci level, and I can see that you can enter here. But I wouldn't have entered here because I did not find any confirmation pattern here. If you don't find any confirmation pattern, you don't enter any trade. So I wouldn't have entered here, okay? But still, you will see that the market still moved upwards, and then it was a successful trade. When market came back to hit the trend line, you can see the market came back to hit the trend line here. The Fibonacci level did not give us any confirmation pattern. Can you see? That's why you don't take any trade here. But when it came back to hit the trend line that we've already done long time ago, you could see that it also gave what? Some kind of patterns here. Give some entry patterns. So your trend line is already there. You enter the same zone. Take profit 1/2. So you see, trading is very, very easy if you know what you're doing. But if you don't know what you're doing and you don't understand retracement, you don't understand pullback, then you get a lot of losing trades. So here I'm using the M1 to trade. So if you want to use the M1 to trade, what are you supposed to look for? The higher time frame for M1 is what? M15 or M5. So you go to the M5 to see if the market is still on an uptrend, because this is an uptrend. So if you want to buy, you must search for the market to all the higher time frame should be on an uptrend. So M5, let's see if M5 is on an uptrend. You can see that, as you can see, this zone, the M5, let's zoom it out. When you zoom it out, you can see that originally, the original trend is on an uptrend. Can you see? Original trend is on an uptrend on M5 and M15. When you view to the M15, you can see the M15 too is on an uptrend. Can you see? When you zoom it in, the M15 was also on an uptrend at that particular moment. So in trading, you must make sure that all the time frames are aligned. If you are trading on M15 and H1, then you make sure that both M15 and H1 are all on an uptrend before you think of entering a trade. Don't just enter whilst one is down and whilst one is up. Okay, so here nowadays I like using the M1 because of my time. I trade the M1 candles now, but I don't advise you to go and trade M1 candles unless you know what you're doing. Always trade the M15 and H1. Okay, M1 is for more expert, more professional. I've been doing this for some time, so I know what I'm looking for. I know how to correct my mistakes. I know what to look for on the chart. That's why of late I've been doing more of the M1 candles. Okay, that's why I've been putting the M1 live videos here, because that one is easy to record a live video for you guys to see. Okay, because H1, it takes almost an hour for one candle to form. I cannot record live videos. I decided to trade my strategies on M1 1 minute time frame so that you guys all will see exactly how I take the trade, and you also put in your mind when you're also trading, you do the same thing. Okay, so more time frame analysis is very, very important. Make sure that all the time frames are aligned. If you are buying, make sure that all the time frames are on an uptrend, and if you are selling, make sure that all of them are on a downtrend. Do not go against the trend. Okay, do not go against the trend. Every time follow the trend, and you have a lot of successful trading. Okay, so my guys, as you can see, you cannot just be blindly be buying and selling. No, you must be good with multi-time frame analysis. You must be good with retracement. Before you enter buy or you enter sell, make sure that the market is in trend, in line with the original trend. If the H4 is trending downwards, you search for only sells on the H1 or M15. If the H4 is trending upwards, search for only buy on the H1 or M15. Never mix them up. Okay, don't just be trading anyhow. Make sure that when you are trading in line with the original trend. And when you do this, at least you get 50% win rate or 60% win rate, and it's going to be very profitable. But if you enter the market without checking the more time frame analysis from the higher time frame, then you're going to have a lot of losing trade. That's why I had to dedicate my time to put this video here for you to watch. Go back to your chart, test it, test and test and test until you become comfortable with it. Practice make perfect. Don't forget, practice will make you perfect. So keep practicing until you become perfect. This was always your mentor. See you next time.